Welcome to Iggy's Insights, where we unpack the big economic questions shaping our world today. I'm your host, Iggy, and in this video, we're tackling a fascinating topic that's been on the minds of many in Southeast Asia and beyond. Can Malaysia's economy ever reach the heights of prosperity we see in Singapore? These two nations share a rich, intertwined history, once part of the same federation, starting with similar economic footing in the mid-20th century. Yet, over the decades, their paths have diverged dramatically. Singapore has transformed into a glittering global financial powerhouse, while Malaysia, despite its size, resources, and potential, remains a middle-income nation struggling to break into the top tier. So what happened? How did two countries that were once so alike end up so different? And more importantly, does Malaysia have what it takes to catch up, or even carve out its own version of economic success? To answer these questions, we'll journey through their shared history, dissect the economic models that define them, and explore the challenges and opportunities that lie ahead. Along the way, I'll throw in some thought-provoking questions and analogies to keep you engaged, because economics isn't just about numbers, it's about people, choices, and the systems we build. Let's start by stepping back in time to understand where this story begins. Picture this. It's the early 1960s, and Malaysia and Singapore are part of a young federation, navigating the uncertainties of post-colonial life. Back then, their economic profiles were remarkably similar. In 1960, Malaysia's GDP per capita, the average economic output per person, stood at roughly 2,690 in today's dollars, while Singapore's was just a hair higher at 2,765. These figures come from historical estimates adjusted for inflation, giving us a clear snapshot of their starting points. Both were resource-rich in their own ways, with Malaysia leaning on tin, rubber, and fertile land, and Singapore banking on its strategic port location. The future seemed open for both. Then came 1965, a pivotal year. Singapore was expelled from the Federation, becoming an independent nation-state with no natural resources to speak of and a population of just over 1.8 million. Malaysia, meanwhile, retained its larger landmass, a population of about 8 million at the time, and its bounty of commodities. You'd think Malaysia had the upper hand, right? But history tells a different story. By 1980, just 15 years later, Singapore's GDP per capita had rocketed to 19,827, while Malaysia's had inched up to 7,405. Fast forward to 2023, and the gap is cavernous. Singapore boasts a GDP per capita of 65,122, while Malaysia's sites at 11,691. That's a difference of over 5 times, a chasm that's hard to ignore. What drove this divergence? It's not just about luck or geography, though those play a role. It's about the choices each country made, the systems they built, and the visions they pursued. To understand this, we need to look under the hood of their economic engines, starting with Singapore's remarkable ascent. Singapore's rise is often called an economic miracle, but miracles don't happen by chance. They're engineered. The city-state's success rests on a carefully crafted model that blends global trade, foreign investment, high-value industries, and disciplined governance into a potent recipe for growth. Let's break it down. First, there's trade. Singapore's location at the tip of the Malay Peninsula, astride the Strait of Malacca, made it a natural crossroads for global shipping. The government seized this advantage, pouring resources into its port and transforming it into a world-class transshipment hub. Today, Singapore's port handles over 37 million containers annually, making it one of the busiest in the world. This trade-centric approach didn't just move goods, it moved money, lifting the economy far beyond what its tiny size might suggest. But trade was only the beginning. Singapore's leaders, notably Lee Kuan Yew, understood that to thrive, they needed to attract the world's biggest players, multinational corporations with deep pockets. They did this by rolling out the red carpet, low corporate taxes, currently at 17%, compared to higher rates in many peers, top-notch infrastructure, from roads to digital networks, and a legal system so transparent it's the envy of nations twice its size. This paid off handsomely. In 2021, Singapore drew in $294 billion in foreign direct investment from the United States alone, a figure that towers over its neighbors. Investors love predictability, and Singapore delivers it in spades. Then there's the focus on high-value industries. While many developing nations leaned on cheap labor and raw materials, Singapore aimed higher. It poured money into education and targeted sectors like finance, technology, and biomedical sciences, fields that demand skilled workers and generate big returns. Take its financial sector. Today, Singapore is home to over 200 banks and manages assets worth trillions, rivaling cities like London and New York. This wasn't an accident. It was a deliberate shift up the value chain, away from assembling gadgets to designing the future. Underpinning it all is governance. Singapore's government is a machine, efficient, low on corruption, and obsessed with long-term planning. From the 1960s to the 1990s, its investment in infrastructure and technology, measured as gross fixed capital formation, consistently outpaced Malaysia's as a share of GDP. This wasn't short-term thinking, it was a bet on decades of prosperity. And with a corruption perception index score that ranks it among the world's cleanest, Singapore offers a stability that's rare in a volatile region. Think of Singapore as a sleek, compact sports car, small, agile, and built for speed. Every part works in harmony, driving it toward a singular goal, economic dominance. But what about Malaysia? Let's shift gears and see how its engine runs. Malaysia's story is different, not a failure by any stretch, but a tale of untapped potential. Blessed with natural wealth, tin, rubber, palm oil, and later, petroleum and natural gas. Malaysia had a head start that Singapore could only dream of. In the early decades, this paid off. Commodities fueled growth, and by the 1970s, Malaysia was a rising star in Asia, exporting raw materials to a hungry world. Then came manufacturing. In the 1980s, Malaysia joined the global electronics boom, attracting companies like Intel and Motorola with low labor costs and tax incentives. Factories sprang up, churning out semiconductors and consumer goods, and foreign investment flowed in. For a while, it looked like Malaysia might follow Japan or South Korea into industrial stardom. Exports grew, and cities like Penang became manufacturing hubs, buzzing with activity. But here's where the story stalls. Unlike Singapore, Malaysia didn't climb higher up the value ladder. It stayed in the realm of low-cost assembly, putting together circuit boards rather than designing them. This kept wages modest and profits slim, while competitors like Vietnam and Indonesia undercut its prices. Meanwhile, the reliance on natural resources left Malaysia exposed to global price swings. When oil prices spiked in the early 2000s, the economy soared. When they crashed in 2014, growth sputtered. It's a roller coaster ride that's hard to steer. Governance adds another layer of complexity. While Singapore streamlined its bureaucracy, Malaysia has wrestled with corruption and inefficiency. Reports from 2023 highlight how red tape and graft deter investors, raising the cost of doing business. Take the 1MDB scandal, a multi-billion-dollar corruption case that rocked the nation in the 2010s. It didn't just drain public funds, it shook global confidence, a stark contrast to Singapore's pristine reputation. Education tells a similar tale. Malaysia's schools and universities produce graduates, but not enough with the cutting-edge skills, think robotics, AI, or biotech, that modern industries crave. Singapore invests heavily in human capital, with programs like Skills Future upskilling workers for the future. Malaysia's efforts, like its technical and vocational education training initiatives, are steps forward, but they lag in scale and impact. Imagine Malaysia as a sprawling estate, rich in land and resources, but harder to manage than Singapore's tidy urban plot. It's got potential, but the upkeep is costly and the tenants aren't always pulling in the same direction. So, can Malaysia bridge the gap with Singapore? It's a tantalizing prospect, and there's no simple yes or no. Let's weigh the strengths, the hurdles, and what it might take. Malaysia's advantages are clear. With a population of 33 million to Singapore's 5.7 million, it has a bigger workforce and a larger domestic market. Its land, 330,000 square kilometers versus Singapore's 728, offers space for agriculture, industry, and urban growth. And those natural resources, they're a gold mine if harnessed smartly. In 2022, oil and gas alone accounted for 10% of GDP, a cushion Singapore lacks. But these strengths come with strings attached. A bigger population needs more schools, hospitals, and jobs, spreading resources thinner. That vast land requires sprawling infrastructure, from highways to rural electrification, which eats into budgets. And resources can be a double-edged sword. Economists call it the resource curse. When countries lean too hard on commodities, they neglect innovation and diversification. Malaysia's export mix, heavy on palm oil and electronics, reflects this trap. What would it take to catch up? First, governance needs a shakeup. Reducing corruption and cutting red tape could lure the kind of investors who flock to Singapore. The 2023 arrest of officials in a smuggling ring shows progress, but it's a long road. Second, diversification is critical. Malaysia must move beyond commodities and assembly lines into tech, green energy, or creative industries. Look at South Korea. It went from steel to Samsung in decades. Malaysia could follow suit with bold investment in R&D. Education is the third piece. To compete in a digital world, Malaysia needs engineers, coders, and innovators, not just factory workers. Recent moves, like expanding STEM funding in the 2024 budget, are promising, but they need scale. Fourth, tax policy could shift. While Malaysia's 24% corporate tax rate supports its broader needs, targeted breaks for high-tech firms could spark growth, much like Singapore's incentives did. Finally, there's vision. Malaysia's had flashes of brilliance. Mahathir Mohamad's Vision 2020 aimed for high-income status, but political churn and protectionism slowed it down. Contrast that with Singapore's unbroken focus since 1965. Malaysia needs consistency, a plan that outlasts election cycles. Here's the sobering truth. Even with all these changes, Malaysia might never match Singapore's per capita wealth. Why? Singapore's a city-state, a compact urban machine where policies hit fast and hard. Malaysia is a diverse nation, juggling urban Kuala Lumpur with rural Sabah and Sarawak. Governing 5.7 million in one city is simpler than 33 million across a federation. Singapore's financial hub status is another hurdle. It's Asia's Wall Street, built on decades of trust and networks. Malaysia's Iskandar region near Singapore aims to emulate this, but it's a David to Goliath. And size matters differently. Singapore's smallness forced ingenuity. Malaysia's scale offers flexibility but breeds complexity. Yet catching up isn't the only metric. Malaysia's FDI hit $16 billion in Q1 2024, outpacing some peers. Its middle class is growing, and cities like Penang hum with potential. It may not hit $65,000 per capita, but $20,000 or $30,000 high-income territory is within reach. Think of it like this. Singapore's a yacht, sleek and elite. Malaysia's a freighter, slower but carrying more. Both can sail, just not the same course. If you're an investor watching, here's the rundown. Singapore's the safe harbor, stable, high return, perfect for finance, tech, or real estate. In 2023, its stock market grew 5% and property values stayed rock solid. Malaysia's riskier, but ripe with upside. Semiconductors, solar panels, and tourism are hot. FDI inflows prove it. Singapore is your steady dividend. Malaysia is your growth stock. Pick your play. Oh, can Malaysia's economy be rich like Singapore's? Not quite. Not in the same way. Singapore's unique edge, size, focus, and decades of momentum sets it apart. But Malaysia doesn't need to be Singapore to win. With smarter governance, bolder diversification, and a commitment to its people, it can climb higher, boosting living standards and global clout. What's the bigger lesson? Economic success isn't a one-size-fits-all game. Singapore thrived by mastering its niche. Malaysia can thrive by leveraging its scale. For us watching, it's a reminder. Prosperity comes from knowing who you are, not just copying your neighbor. Thanks for joining me, Iggy, on this dive into Southeast Asia's economic saga. Hit subscribe, and I'll see you next time.